Jamaican, Portuguese, and what was the second one you said?
Vincentian from St. Vincent.
Oh,
Are you
nice.
Jamaican too?
What's that?
You Jamaican?
No, I'm Haitian. I'm Haitian.
Oh, Shizzy. Oh, Shizzy. Oh, Haitians.
I'm Haitian, mixed with Haitian, mixed with Haitian.
Hey, fuck that sapase bubule.
Nabule, nabule. That's all everybody knows. Everybody just knows that. They don't know nothing else.
Yeah, right. That's literally all I know.
Everything. But that's what's up though. A lot of Jamaican traders, a lot of island traders is something that I'm seeing now. A lot of island traders, which is pretty dope actually.
Very dope. I didn't even know that I had signed into the link that I had signed up for because I was like, where is it? I was like, did I just have to click it? Yeah, was it just a Telegram link?
Yeah, it was just a Telegram link. That was it. I don't know why. Like a lot of people were confused by it for some reason. It was just maybe I don't know. Maybe I didn't specify the rules like well enough on the flyer. But yeah, the link was there, and then you know what it was? I think because I have a webinar next week on gold. I think some people mixed up the two. I think they were thinking one was the other when it wasn't, because I actually have one next Wednesday as well. But that one is a separate webinar, separate from this one. So that's probably where the confusion came in at. But nonetheless, a lot of people came on. Apologize for starting a little late. There was a little bit of traffic on my way home, but I was able to make it here. So let's go. Let's get this thing going. Let's answer some questions. Let's talk some chart work. Let's talk about gold. And let's try to share as much knowledge and wisdom as we can on this so that we could, help out some of these people. You know what I'm saying?
Turn my camera on in a minute. What did you want to start off in particular? Because I know you wanted to talk about psychology and possibly some chart patterns, but mindset and stuff like that.
Yeah, for sure. I wanted to talk about psychology, but is your camera on right now?
Yeah, I'm about to turn it on.
Okay, because I wanted to make sure the both of us were on screen here so everybody could see who's actually talking. Let me know when you turn it on so I could pin you so we can both be on screen.
You're a lot better looking than I am, so a lot of people would rather see your face.
They rather see my face. I think they see both of my faces. Like we both have faces, so. But yeah. How long you been trading gold?
So I've been trading gold for a hot minute now. I started trading gold in 2016. Yeah, 2016. I started going really heavy on gold. And I've been trading it ever since. I dabbled in it a little bit in 2015, but I had saw one of my friends making a crazy amount of money off of gold, and I was originally an oil trader. Oh, so wow. They would call me like the oil father, which is funny, and it just kind of sounded gross now that I think about it. But
oil father, the lube father,
right? Bad moist. But yeah, I did that for a bit, and I transitioned to gold, and I just found something that was good for me, something that stuck with me, and it kind of helped me from stop hopping around from one place to another.
Okay.
Didn't want to be jack of all trades, master of none, and so I just stuck with it. I got really good at it, and it worked out.
And you trade gold more technical or more fundamental?
I trade gold technical and fundamental.
Okay.
I'm not like a fundamental god or anything like that, but I do take fundamentals into consideration when I'm trading. But I like to use TA, and I use a lot of liquidity zones.
Okay. With
order flow, a certain type of order flow, not like the generic one everyone talks about.
Right, like the smart money or the Wyckoff, all that kind of stuff, order blocks, and put it in a little box, but there's a lot more that goes into it than just that.
Absolutely.
Yeah. So I guess my backstory with gold, basically, I've been trading gold recently, for the last like 3, 4 months now, I had stopped trading gold when Corona hit because I had taken this like crazy ass trade on gold, and I took this ugly ass loss. It wasn't a lot, but it was enough to make me like back off because gold started like just tripping, acting all kind of crazy once Corona hit. So that's what kind of led me to wean off of gold a little bit and dabble in GJ and GU, and that's how I ended up staying with GJ. But you know, once I saw like that gold was kind of moving, get back into its normal routine, I decided to, talk to some other trader friends of mine, and I decided to dabble in it again, and I've been doing well with it ever since. So now it's my main pair. It's my only pair. I don't even look at other pairs, to be honest with you. If I do look at other pairs, it's usually when I'm like doing a one-on-one with one of my students, or I'm looking at a chart from another trader friend of mine or something like that. But other than that, if it ain't gold, I'm good. I don't really need anything else, because gold is Bay. Gold is Bay now. So yeah, so I've been trading gold now. I would say between the time that I first started trading gold and now, put it together, it's going to be just over 2 years. Just over 2 years, which is not that long a time when you think about it. But the way I traded gold back then and the way I trade gold now, totally different ways. Completely different ways of looking at the markets. I also trade TA, and I don't really look at fundamentals too much, because I don't trade news. I don't trade what I think is going to happen based on what the market conditions are at that time. I simply look for technical analysis. That's almost all I look for, and I keep an eye out for news. But other than that, gold is definitely where it's at. Gold is where it's at. So yes, I'm hoping on this call that people can get to know the both of us, if they don't already have a good idea of who we are, how we look at gold. I didn't want to go into chart work, but if you want to go into some chart work,
yeah, we can go into psychology, mindset.
Yeah, just to give, I guess, give everybody an insight on both of our minds, because I haven't really seen too much of how you trade gold, but from what you described to me, it sounds like we pretty much have somewhat of a similar style to looking at it. But I would like to see, like, in real time, like how you look at a chart and how you break it down on gold. I was on a webinar once that you did with James Storms once, and that's my fault that I didn't get as much information out of it as I should have, because I was distracted while I was watching it. I was like doing a million different things. So
I know it'd be like that sometimes.
Yeah, so I really couldn't focus on it like I wanted to. But the little bit of information that I did get out of it, it seems like you got a pretty solid grasp on what you're doing. And but what you do, what I think the way you look at gold is a lot more in depth than I do, and that's why I'm looking forward to seeing how you look at gold and what you look for, because I think I could learn a little bit something from the Gold Father. So
I think we could definitely learn from each other. You know what I'm saying?
Absolutely.
Definitely. So yeah, I could give you a breakdown. What do you guys want me to do? You guys want me to go in psychology first, mindset? I always love to go into mindset first a little bit, so then you can understand how I'm thinking, right? Because I could sit here and tell you what to think, but if I show you how to think, it's different. Like I could tell you that a strawberry is red, and that's telling you what to think. But if I ask you, well, why is a strawberry red? Now it's teaching you how to think about why it is red. So I really want to teach people how to think first. So what are some questions you have? What are some questions that you guys think that you struggle with? People are still asking me for the link now. I got it though, busting it up. So what are some things that you guys struggle with that you feel that you can't get past?
Let's see. I see blowing accounts, getting over losing streaks, mindset. Well, yeah, let's talk about it. Let's talk about blowing accounts and losing streaks. That's a big one. That's a big one for sure.
So I got something I'm gonna bring up a little sheet.
All right. For a beginner trader, where does one start? This might be a very advanced webinar for you, buddy. I'm stuck at break even. Okay, at least you're not losing.
Right? You're not losing. That's the way you got to look at it.
Yeah, that's it right there. Because most people are taking L's. So if you actually at break even, you're right where you want to be.
So I got these rules that I have written down. They're different biases. So let's see what some people say. They have, yeah, mindset makes sense with, okay, execution. I started on break even part, sticking to technical biases after losing. Okay, so technical bias, right? This is one thing that I have down here. This is confirmation bias, right? And excuse me if I look like Drake, like reading off of this right now. So confirmation bias is basically like when you have a certain conviction about something, right? So many traders, they end up losing on a trade because they look for that confirmation bias. So they'll say, okay, well, the price of gold is going up to 1790, right? And they'll have that conviction. They'll look for all these different things. They'll look for their technicals to line up, for their indicator to line up, to see what the fundamental analysis is lining up. And they look for so many reasons to be right that they never actually look for a reason to be wrong. You understand what I'm saying? And so I feel like when you have too much, the dangers of having an over confirmation bias is that you only think that the trend could go possibly one way. You don't think of another way that the trend could possibly turn out. And that's one thing that traders have is they have, it's too much of a pride and too much of an ego because they want to be right, but they don't realize that they would be more right if they started thinking about why they could also be wrong. Because if a trade goes the opposite direction, then it's kind of like, you know what to do. It's like, that's why we have fire drills, right? Because we know what to do when there's a fire. Or well, what happens if I'm stuck in a fire? Well, you take this door, you take that door. There's not just like one exit that you go through. There's not just one alternative that they give you. They give you stop, drop, and roll. They give you a fire extinguisher. They give you all these different things to stop the fire. So when you want to stop blowing your account and you want to stop seeing trades go the opposite direction that you anticipated, the best way to do is to think about both ways the trade could go. So for every confirmation that you have to think about how a trade could go in your direction, think about the same way it could go out of your direction. And when you think about that, then you could kind of prepare yourself a lot better and you feel a little bit less emotionless to the setup because it's all about EQ, not about IQ. That's what I'll say.
Most definitely. And that was a great take that you took just now. And just to piggyback off of that, that also goes hand in hand with not marrying your trade, not marrying your bias, right? Because you want to look at the market from both points of view, right? What are the chances that the trade is going to go this way, and what are the chances it's going to go this way? What probability do I have in being correct and being wrong? And how do I minimize the risk on my trade? Do I need to wait for extra confirmation? You know what I'm saying? Do I need to look for more reasons as to why the trade can go my way or why the trade can go against me? So not marrying your trade and looking at the market from both angles. Look at it from this angle, look at it from that angle. Ask yourself which one has the most probability to go this way and what has the most probability of going this way, and how do I capitalize on that while keeping my risk as low as possible.
Nice.
So that's right there.
No good risk management, no Rari.
That's it. That's it. That was excellent though. Asking too many traders like, okay, the market is going bullish, so I'm only looking for buys. The market is going bearish, so I'm only looking for sells. Meanwhile, what's your style of trading? What are you actually looking for? How do you know you're entering at the right time? What if the market is bearish, but at a certain time that you're trading, it's retracing a little bit to go bullish? And now you thinking, oh man, I'm wrong because the market went bearish or bullish, so now I'm wrong. Meanwhile, you're not wrong. Your timing is just not there yet. Your entry might be a little early or a little late. So you have to look at the market like, okay, if I took a trade, why did I lose this trade? Did I lose it because I didn't wait on confirmation? Did I lose it because of my lack of knowledge in the market? Did I lose it because I don't know what the hell I'm doing and I'm just taking buys and sells like willy-nilly? You know, you have to know why you want to trade and why you lost a trade. That's the only way you can duplicate that. The only way to duplicate your results is to know what you did and why you did it. And whatever your results is, try to get that again. Trading is doing the same shit over and over and over again. Market does the same shit. It does the same thing over and over and over again. So why try to reinvent the wheel?
I really don't understand it to this day why people try to do that. I think people just want to look for other reasons to just be right. So they'll come out with something this, they'll come out with that. They'll do all these different things just to give themselves that that boost of confidence. I mean, and it's understandable, but you know, the only way to change those certain things about yourself is to change those certain things about yourself. You know what I'm saying? You can't just say, oh, you know what? Yeah, I'm gonna do this and that, and then not act on it. Like that's another thing, is that self-discipline is the lifeblood for any type of success, whether you're in trading, whether you're in whatever it is. So what I suggest people to do is something I learned about dopamine, right? So when you're trading, right, you want to use high risk because that releases a lot of dopamine in your brain, right? Anything that's easy for us to do, a lot of dopamine is released in your brain, right? So that's why, you know, like reading a book, studying, all those things, you're easily get distracted because those things produce low dopamine. They don't really get you as hype. That's why more people would be willing to like play a video game or, you know, go out and party or go do these things that are high dopamine because they're easy. So it's easy for someone to put high risk because they want high reward, right? But it's much harder to put lower risk because that releases a lower amount of dopamine, right? You're like, oh man, I only put $1 per pip and I only made 20 bucks, right? So that doesn't give you as much dopamine. But what you should do maybe one day out of the week, what I would suggest, maybe one day out of the week, what you can do is have a day where you do very low dopamine stuff, right? And it's going to put you in a state, and this is going to help your trading. It's going to put you in a state to where you can live off that low dopamine. It's like if you're used to eating at fancy restaurants and then I give you a bowl of rice, you're going to be like, I'm not eating that. I'm used to eating $500 a day food. But if I put you on a stranded island and then I give you that bowl of rice, now it sounds different, right? Now you're like, I'll take that. So what you want to do is maybe once a week, twice a week, try to use low risk management. Have an account, right? Have an account for high risk and low risk. Have an account where you use your low risk account and you practice that exercise. You start using the lowest lot sizes you can. Once you start using those low lot sizes, you're going to start living what becomes low dopamine is now going to become high dopamine for you. And the high dopamine you had off before from using high risk is going to make you feel a lot better because you're putting yourself in that state and you save your capital. I'm not telling you have to use the lowest risk management in the world, but use it effectively enough where you can stay in the game. It's like water, right? Risk management is like water. If you don't have enough water, if you don't have enough food, you're going to dehydrate, you're going to die. So this is why it's essential to use risk management. So that's what I'll say about the risk part.
You know, that again, that's that I never ever thought of it in that sense. That's very interesting that you mentioned that, because that rush that you get from placing a trade, even if it's a small lot size, I think that's needed. It's needed, right? Because trading is it can be so boring at times because you're like, it's lonely, right? It's just you by yourself and your chart. So you kind of need that extra kick to get you going. So that's why I'm a big preacher of trading live instead of trading demo, because when you're trading live, it's a whole different ballgame. Even if you're trading a small lot size, the fact that you're trading live money, it's a whole different ballgame. So I think, you know, your scientific outlook on that when it comes to human emotion and dopamine being released into the body from the brain from you actually executing on a trade, that's huge. And to have discipline over that goes way further than just mental toughness. That's a different level of determination and discipline. And if you can master that, where there's no emotion at all, to where you kind of don't give a shit. I mean, it's like, hey, it's like a Hail Mary, like taking a Hail Mary every day. I don't agree with that in you know, to take a trade and not give a shit. But at the same time,
Right, definitely.
a certain level of not caring how the outcome is required, because you and I can take a trade and we could win the trade and lose the trade, and it's the same. It's the same to us. There's no, oh my God, I won. Oh fuck, I lost. No, it's I took it, it is what it is.
Exactly. That's the kind of, it's just like, there's no happiness or sadness. It's just content.
Exactly.
Like, I lost. Okay, cool. I won. You know what I mean?
Exactly. And the numbers don't matter. Now, if you hit a big day or something, okay, that's different. But at the end of the day, you're gonna get to a point. You're going to get to a point where it's no longer about the money. It's about just maintaining the skill. Just maintaining the skill. That's it.
That's a fact. That's a fact. Yeah, no, I totally agree with that. Like, you can't be 100% emotionless, right? Mm-hmm. But you can detach yourself from the idea or outcome of something happening, because you've already set a certain expectation in your mind, right? The expectation is the understanding of knowing that I'm gonna lose. Like, no matter how good I am, I will end up losing eventually. I mean, it happens to the richest people in the world. We see Facebook lose 30%, 20%. People say, oh, well, they have billions of dollars to lose, so it doesn't hurt. Like, no, that shit hurts. Like, that hurts. Like, yeah. You know what I'm saying? Even if I had 100 billion and I lost 40 billion tomorrow, I'm gonna feel some type of way.
Yeah, you're gonna feel it.
You gotta feel it, because that's just not your money. You're also losing money for other people who are investing. You know what I'm saying?
That's where the emotion comes in at.
Yeah, that's where the psychology is even more crazy. So you got to think, like, if you can't lose money for yourself, like, you damn sure can't lose money for other people. Exactly. You know, so you gotta really harness that. Some more questions. What do you guys have? Some more questions about psychology?
Somebody said best pairs for beginners. Definitely not gold. I can tell you that right now.
Definitely not.
definitely not gold. So if you're a beginner, stay far away from gold. As far away. You shouldn't even be on this webinar if that's the case. But no, that I actually did. I did a poll on my IG a week or so ago about like what do you think the reason is behind the fact that people want to trade such hard pairs when they're not ready for them, like gold, you know, US 30, NOS, like these type of pairs in my book are difficult pairs to trade. Yet I see so many people who have less than a year and a half under their belt where they're still kind of getting their feet wet and they're trading pairs like that with no consistency, mind you, no consistency, but yet they're still at it. Like, what do you think the reason is behind people doing that?
I'm going to be honest with you. I think the reason behind people doing that is people like us, right? We post our setups. Mm-hmm. I mean, of course, people get inspired, and which as they should, right? Like, that's awesome to see somebody winning. But I think, like, when like me, you, Q, Anthony, Daniel, whoever it is, you know, posting their setups, people see it and they're like, damn, like, I want to do that too. So then they go in with the expectation that it's going to be super easy. But when they get in, they don't realize how hard it actually is. You know what I'm saying?
Okay.
Like, they don't really see how hard it actually is. And of course, that's not our fault. Like, you know what I'm saying? I'm not telling you that you could trade whatever pair you want. Now, are there some people that may hop into gold or US 30 and have a certain knack for it and get it? Yeah, there are, right? Yes. There are some people that hop in and they get it. You know, I had one student, Candace. She didn't know anything about trading like 2-3 months ago, and US 30 was her favorite pair. You know, she didn't even like gold. She was like, I like US 30. And I was like, that's kind of crazy that you're trading that. I think that's a little too early, but she proved me wrong. She did it well. So, you know what I'm saying? I just think that there's certain people that will have a knack for it, and other people might have to start out with something different. I think it's what really suits your personality, you know?
Yeah, definitely. I think you're right about it. I'll say this: when I first started trading, and one of my first pairs to trade was not GJ. It was AU, then UJ, and then I dabbled in GJ. And once I got over to GJ, I saw like how difficult it was. I went right on back to AU. So it's kind of like, for me, it's like once I got that whiplashing from messing with GJ, I learned my lesson early with it. And I was like, okay, I'm not ready for the type of way that this pair moves. And I can't keep taking L's like this. So I had to go back to a less volatile pair. But I see a lot of people, a lot of followers of mine, a lot of traders that follow other people, and they're just taking that licking when there are other pairs that are easier to trade where you can make just as good money now. You know what I'm saying? Like, you might not be hitting big days, but you'll do all right for a quote unquote beginner. But yet they don't want that. They don't want that. And to me, that's a big issue that I see a lot of people have, because you're so focused on looking at what someone else is doing that you're not focused on what you need to be doing to get to where that person is. You get me? So if somebody is, you know, trading US 30, you know, like let's take Q, for instance. A lot of people are trading US 30 for the sole fact that Q is trading US 30, not realizing that Q was hitting, you know, 10, 20, 30, 40, 50K days on fucking UJ before he ever looked at US 30. So I look at it as, if people are too focused on looking at what other, like comparing your chapter 1 to somebody's chapter 30. You know what I'm saying? If you keep doing that, you're never going to succeed. You're never going to make it as a successful trader, because you're always one step behind. You're always one step behind, trying to get to that next level that this person is at, not realizing that it's levels. It's levels to this shit. You know, you're not going to have to get it overnight. I'm not trying to discourage anybody from trading US 30, NAS, gold, anything like that. What I'm trying to impress upon a lot of people is, don't put the horse before the carriage. Just take your time, take baby steps, and see, like, go through all the trials and tribulations that it takes of taking a licking on on easier pairs like AU or UJ or EU. You know, mess with the little pairs of the currency pairs first, see how those things move, because the more experience that you get trading currencies, the better you'll be when you're ready to level up to exotics and indices. That's just how I go. It's just
honestly too. I wouldn't even say I mean, US 30 is a little bit wild. You know what I'm saying? You're a wild boy, you know, if you're doing that. But yeah. I would say gold is not as crazy as US 30, right? No. Gold moves intense. So I mean, is it possible for you to start off in gold? Yeah, it's possible, but it's all like how you start. For me, if I was going to restart in gold again, and that was the only pair I was going to start with in the beginning, I would be researching about it. I would be, you know, probably going on a practice account, looking at like everything back and forth, looking at how it moves on Wednesdays, on Thursdays. I would get to know everything about it before I fully invest myself in it and be like, okay, this is something. Like, some people just open an account and ready to just, you know what I'm saying? Like, damn, do a little background check at least.
Something.
You know what I'm saying? Like something. Like, can we get a swipe back to the left a little bit before you start trading to the right? Like, it's kind of crazy to me, but you know, I get it. It's that impulsiveness, you know what I'm saying? Of that expectation. And you gotta understand, you gotta control that before you even jump into the charts, because once you go in with that attitude, because that's what trading is. It's not just a mindset, it's also an attitude, right? Yeah. It's also how you perceive certain things. And so yeah, so when you perceive certain things in that way, you know, you'll know how to maneuver a little bit. It's like being street smart.
Yeah. You gotta, the way you are when you start is not gonna be the way you are when you finish. You know, the type of trader I was when I first started trading is nowhere near the kind of trader I am today. And I'm not just talking about progression. I'm talking about in terms of knowledge, in terms of experience, and what I've grown to learn about myself as a trader, and about, you know, the skill of being an experienced trader. So if you out here, you know, trying to dunk a basketball before you even learn how to dribble, then you know what? You're setting yourself up for failure every single time. And rushing the process. Too much. Let's talk about psychology a little bit, right? Rushing the process. Why are you in a rush to hit the lotto tomorrow? Some people just heard about Forex 2 weeks ago and they want to be a millionaire, but you know, next month. It's kind of like, take your time. Take your time. The markets ain't going anywhere. The charts ain't going anywhere. Take your time. Why? What's the rush? You know, I don't get it, but I've been there. I was there. I over leveraged. I traded US 30 at one point when I shouldn't have been. I traded gold at one point when I shouldn't have been. We all been there. So we all got to go through those growing pains before we learn our lesson. It's part of the journey.
It's part of the journey.
All part of the journey.
I think cloud needs to be chased.
You a pair. Nas be kicking my ass, and I bet you still trading that shit.
Actual factuals. He's definitely still trading that.
Yeah.
Gold trend better? Oh, gold. I thought you said bender.
I will say this though, Dimitri. Do you find, because I found that gold is easier to trade than currencies for me now. Like I was GJ. GJ was my pair, right? But GJ would often, do some things to me here and there because I'm like, man, I thought I knew this pair and now it's doing some freaky shit. Okay, I got to relearn it again to see how.
Wait, this webinar is capped right now? It's capped at 99 people?
It shouldn't be because I have unlimited, so it should not be capped.
Okay.
It only says, now it says 100.
Okay.
Yeah, it shouldn't be. I have unlimited, so it shouldn't be capped.
Okay.
So yeah, so gold, I've come to realize that like gold is easier to trade for me instead of currencies.
Her love said some of her people couldn't. She said, yeah, it's capped at 100. I think that happened to mine too the other day. I don't know what, is that like a glitch? Zoom be having some weird glitches lately.
Nah, that should not be the case. It better not be because I'm paying for unlimited.
Bro, I'm telling you, same thing. I have unlimited too, and the same thing happened to me like the other day.
They capped at 100?
Yeah, I was like, why is it not going past 100? That's why I asked you. I'm like, because somebody couldn't get in. It's probably not. I don't know what it is.
Let me see something here. Let's go to
Zoom be on that weird stuff. Last time they had they said like 2K people were on my webinar and it was like 200. I was like, what?
I know the bandwidth can be an issue sometimes if everybody has their video on, but that shouldn't be an issue here. Maybe we got to go on IG live while we're doing this because what happened?
I blocked from IG live.
Oh, what the hell? Who'd you piss off?
No, they always talk to me about like posting things about COVID or something like that.
Wow, you gotta be kidding me.
Crazy. Zuckbot. I mean, this is straight. It's whatever. I mean, 100 people on, whatever. That makes it more exclusive at the end of the day.
Yeah, I'm looking at my settings here to see what's going on because remind me. But you can answer some of the questions while I'm looking at this. Let me try to see what's going on here. So,
would you recommend gold over currencies as an intermittent trader? Oh, I think you intermediate trader. You're Samantha. Would I recommend gold? For me, like she was saying before, like Charlene was saying before, like I feel like I can't kind of go back to currencies. It's a little bit different, now. Like now that I'm in gold, I just feel like being on currencies it's just weird. Not that I forgot them or anything like that, because actually my two favorite currencies that I love to trade are US Turkey and USD Mexican peso. Those are my favorite currencies that I like to trade.
Did you say US Turkey?
Yeah, Turkey dollar.
I've never heard of that before.
Yeah. I trade the lira. I love that. I love that pair. I be going crazy on the lira. The spread sometimes gets a little bit ridiculous. Let me see if I can share my screen. Oh,
are these listed on MT4, MT5?
Yeah, USD TRY. It's listed on MT4.
What?
Yeah, Turkey dollar and Mexican peso. I love trading Turkey dollar.
Wow.
Yeah, I love it. I love it so much. I only traded on like the daily chart too, and like the 12-hour. But man, there was a huge drop, which I'm kind of tight that I missed, but it's whatever. You win some, you lose some. But it was Turkey dollar was going up, and I had my sell pending higher than anticipated, and it dropped. It didn't touch my sell pending. Like it went up, almost touched my sell pending, but it dropped literally 6,000 points.
Wow.
In 4 days.
Wow.
Yeah, your turkey's been going up since like how long has turkey been going up for? Let's see. It's been years now. Turkey been going up since 2014. Oh, like turkey has literally been in a straight buy trend, like off the daily. Off the daily, it's been in like almost a straight buy trend. Like look at the monthly, and like from a daily perspective, like if you kind of think about it from a daily perspective, it's been straight buys. Like it only had a few pullbacks in like 2018, and it had a little pullback in 2020, but it's been primarily going like just shooting up through the roof. And Turkey is also another place that they're big on gold. They also hold a lot of gold, and they also love to invest into gold too. And most Turkey traders, the only thing that they trade is Turkey dollar and gold, because that's what they know the most. So
wow.
I always look at the lira and gold too as well.
I'm gonna look up those pairs just out of curiosity, but that's incredible. I've never heard of those pairs before. I thought you were joking. You said Turkey. I'm like,
not Turkey dollar. What? That pair is popping. Can I show you the chart real quick?
Yeah, definitely. Do you have access to share your screen?
Oh no, I don't.
Let me see. There we go. All right, you should have access now.
Okay. I mean, well, this is what it looks like. I'll just show you what it looks like. That's
all right.
This is what it essentially looks like. The pair, but look how long it's been going up for. I mean, this is ridiculous.
Yeah, that's a huge. What? That's a daily or monthly? Monthly.
Monthly. This shit been going up since 2015. Like, bro, what? Even if you go on the weekly, it's still been going up since the whole year. It's just been skyrocketing.
How is that even possible? Because they usually say that when a pair is trending in one direction for way too long, it usually means that that country is experiencing some sort of recession or economic downturn.
I'm not sure the reason why it was. Well, somebody had told me, I went on a Clubhouse and somebody had told me who was Turkish. I forgot what the reason was. Don't quote me on it. But let me just see. I'll be able to tell you right now if I want to say anything I don't know.
Yeah, I'm so mad this thing capped at 100. I don't even know why it's saying that. I don't even know how to fix it. I'm definitely emailing Zoom tomorrow though.
Yeah, that happened to me too. I really don't know what's going on. They keep saying it's
crazy. USD TRY.
Currency prices.
Yeah.
We see this dropped here, and then USD Mexican peso. These are like the only pairs that I trade. Like I had a setup here too, which was crazy. But
and you trade off the higher time frames?
Yeah, I usually like to trade off of higher time frames. Like my setup is a little bit weird. So I have one account for buying, one account for selling, one account for high risk, one account for low risk, one account for news, and one account for trial and error. The reason why I do it this way is just to like diversify like my emotions, and then like also keep my portfolio like clean. Like I can see all the sells I've done. I can see all the buys I've done. I can see all the high risk I've done, the low risk I've done. So it's like usually sometimes when people get on their main account, they'll want to take news trades on their main account. But for me, news is very volatile. So if I ever trade news off like USD Mexican peso or Turkey, I'll just literally take that trade on my news account. So anything that's like NFP, FMOC, anything like that, I'll do it quickly off news. So that way it's like, I'm not interfering with major volatility on my main shit. You feel me?
Yeah, that's needed. Like you gotta have different accounts for different levels of risk, because you're gonna want to scratch that itch. We all have that itch where we want to go full margin, over leverage like a mug. And, you know, if you do that on your main account and you fuck up, you're going to be mad. So it's best to just have separate accounts for different levels of risk so that, you know, whenever it comes across your desk and you ready to do it, just do it on that, you know, specific account so that if you do take a L, you know, it's not as bad because that's what that account was for, you know?
Nice. It's like if you have anger problems, like if you're like an angry person, right? And you're trying to get over it, the best thing for you to do is not punch somebody in the face in the street. So you might get a punching bag, right? That might be another alternative for you to release that anger. So the same way you might say, you know what? I know I'm not really good at risk. So let me not lie to myself and let me make a high risk account and a low risk account. That way you could exercise that high risk. You might start it with like $500 and that might be $500 you could lose, but at least you can feel good knowing, okay, you know what? That's my high risk. I still got money in my low risk. I still got money in my news. You know what I'm saying? Yeah. And you actually have more margin that way because you're spreading your margin across wider rather than just condensing it into one space.
Exactly. So. Exactly. And it's a lot less stress on you too. Because if you take a high risk trade on your main account and that's all the money you have, you're adding risk, you're adding stress to an already stressful situation.
So that's all the money you have.
You know, like at that point, that's just dumb. That's just straight dumb. Like you're a dumbass. Like, what are you doing? You know? So yeah, that's a big point. That's a real big point there.
I mean, it's all cool if you couldn't fix it. Like, that same thing happened to me, man. Like, Zoom is weird. Like lately, I'm about to start doing like Google Live and shit.
Yeah, that might be good. That might be a big help. Somebody said go on Google, type in Zoom cap at 100, and it will tell you how to add on. All right, let me give that a try. Let's see what we can do here.
Okay, 200, we'd have 300 people. So somebody's drawing.
Yeah, they are. I hate when people do that. Let me turn that off real quick.
I just turned it off for you.
Okay, thanks. All right, let me see real quick here. Google. So Zoom.
Oh, I think it's if you pay 300.
What?
Zoom charges me like $350 a month, $360 a month. And I think maybe my cap might be 1,000 people.
Oh man, how to host more. Software.
Damn, they're really trying to do the upsell like crazy.
Yeah, but I don't get it because I'm pretty sure I had unlimited because I used to have open webinars where I knew I would have more than 100 people. So entry only hosts up to 100, although it comes with 24-hour personal ID. Oh yeah. Includes 100, includes 300. Why does yours say 300? Because this one only says $19.99 a month.
Oh, my joint says 300 a month. Like every time I look on PayPal, the little notification comes up. It's like Zoom charged you 300.
You might want to check that. They're raping you right now because there should not be no $300.
Right? They give me the Chief Keef number.
Yeah.
Run it. That's Chief Keef charging the Zoom. That's crazy.
Yeah. All right, guys. So, all right, next Zoom session. I'm gonna get it right. So, so yeah, let's see if we can get through a little more of these questions before we get into some chart work. You want to just jump into the chart work or?
Yeah, we could jump into the chart work.
All right, cool.
Whatever you guys want.
Yeah, let's do some chart work. Let's do some chart work real quick. You want me to go first or?
Yeah, whatever you want to do. You can go first because I know you were.
All right, cool. So let's go.
Somebody said, if you owe me money, I shouldn't see your kids opening shit on Christmas.
For real. That's facts. Oh, you got run me my coins first.
Run me my Ethereum real quick. That's funny as hell.
I take all forms, Bitcoin, Ethereum,
polka dot, all that shit.
I might even take Section 8 on your ass.
That's funny.
All right, so share screen. Let's go here. All right, trading view. Gold chart. I haven't traded.
Your chart looks mad nice.
Yes, I like to keep my charts clean.
That should look different. I'm not even gonna hold you.
I like to keep my charts clean, but I haven't traded. Like, look at the last time I took a trade. This was the last trade. Like, I haven't traded in God knows how long. God knows how long. I think the last trade I took was, I want to say like almost a week and a half ago. Yeah, about a week and a half ago.
Market hella choppy now.
Yeah, like you see this fuckery that gold is sitting in? That's what I'm waiting for it to come out of this bullshit right here, for it to start doing some of this. Gold needs to start doing this and this and this and this.
Yeah, more of that drop right there.
Yeah,
that's
what I'm waiting on. Right. So this is how I look at gold, right? And I come to the charts, depending on when it is, like if it's start of the month, start of the week, whatever it is. I generally like to get a really good idea of what the market has been doing, right? So I see that market made a nice big push, then it retraced down, right? All this liquidity, all this money down here, came down, grabbed a lot of this liquidity, stopped out all these swing traders that's grabbing all this shit up down here, right? Came down here, and I would see that gold stopped like right here, right? So gold stopped right here before it pushed up out of this range, right? So we have this box here, this resistance level here. Gold finally broke out of it. It played around a little bit before it finally broke up. And then when it did break up, it broke the previous high. I'm sorry, guys, my mouse is tripping right now. It broke the previous high that it held right here. And now it's holding this level here. So we have a level of resistance here, right? That's holding. Price made a high. So the last high that price has been holding was about 2077.86. So right around that area. So that's the high. That's the high that we have to keep in mind. So whenever price, let me take this off. Whenever price comes back inside this range here, I'd be looking for price to either break above or reject. If it rejects it and it doesn't make a new high, then obviously we're looking for price to come back down if it tests it. But for the most part, it's making lower lows and lower highs, right? So we look at on a monthly time frame, right? So it's nice and clean, right? It came up and made a high, low, high, lower, low, high, and now it's kind of just playing around right here. Okay, and price is holding this level of resistance here and this level of support down here. And if you notice, Dimitri, I like to do my breakdowns on the higher time frames. I love the high time frames on gold, because high time frame is king. It really is. You cannot touch high time frames when it comes to trading. You got to know your high time frames in order for you to understand what might happen on the lower time frames. I'm a scalper. So people think that if you're a scalper, you don't care about the high time frames. That's bullshit. Any type of trader that you are, be it intraday, swing trader, or a scalper, you got to know your high time frames. You got to be able to break down each time frame for you to see what each time frame is telling you, what each session is telling you, and what you think your next trade idea should be. Right? So right now this looks messy, right? People looking at this and like, oh shit, this is like a bunch of mess. This shit looks clear as day to me. This shit looks like fucking Picasso to me right now, right? I know exactly what's going on the market right now. So you got to be able to break down your high time frames, and every time you drop down to another time frame, you still have to know what the higher time frames was looking like and what to look for as you continue to drop down, your each time frames. Now on gold, I never ever really enter on the 5-minute time frames. The only time I look at the 5-minute is when I'm in a trade and I'm looking to see if I want to hold or if I want to secure profits, or if I want to close if I'm in drawdown. Right? That's the only time I really look at the 5-minute. Anything other than that, I'm really looking at mostly the 15 and the 30-minute for my entries. But my analysis, the bulk of my analysis comes from my weekly, my daily, and my 4-hour. The 1 hour, I really don't mess with too much, because everything I need is mostly on my daily and my 4-hour, and then I'm looking at my 15 and my 30 to look for my entries. That's pretty much it. Okay, so Looking at the chart here, obviously we knew that on the monthly time frames, price made a high and then it's been making lower lows and lower highs ever since, right? So we have a high here, another high, 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 high. If you look closely, those of you that are watching, we're in a downtrend. We're in a clear downtrend. Every time price tried to come up, it did not break the previous highs that it created. So obviously, if it's not making a new high, most likely it's going to reject and try to come back down to make a low and either make a new low or test the last low and then come back up and try to test the previous high. Going back to what Dimitri was talking about earlier with being flexible with your trades and analyzing the markets from both points of view. Do not just come to the chart, look at it being in a downtrend and say, okay, fuck it, I'm just gonna look for sells. That's dumb. You can't do that. You gotta really, really analyze what the market is doing to let you know what it's doing. Right now it's in a downtrend, but every time it was in a downtrend, at one point, it pushed up. At one point, market pushed up. It didn't always push straight down. There are times where the market has to retrace. If you don't wait for the market to make retracements, for the market to make its pullbacks, you're pretty much taking a shot in the dark, right? You're throwing mud at a wall and hoping something sticks, because the market has to move in waves. It can't just drop and drop and drop. It can't just push and push and push. The market has to move in waves. Whether it does this shit, breaking structure, this type of shit, it has to move in waves. You know what I'm saying? So you can't just come to the market blind and just say, oh, the market's pushing up, so I'm just going to look for buys. No, bitch, because the second you jump in for buys, the market's going to dip on your ass. And then you're going to, oh, I was wrong. And then you're going to take sells. As soon as you look for sells, the market's going to say, oh, thank you, and go right back up for buys. So like people complicate trading way too much. Way too much. That's a big, big, big issue I see amongst traders is you guys overthink the fuck out of something that's just so damn simple. Something so simple. You look for your support levels, you look for your resistance levels, you ask yourself, okay, is there volume in the market? Okay, is the market bullish or bearish? Do I know what the hell is going on? Do I know what to look for before I enter the market? If I don't know what to look for, I shouldn't be, wait. Just fucking wait. What are you rushing to take a trade for when you don't know what's happening? You're just guessing at this point. You're just guessing, right? So I'm jumping around back and forth now, but that's just how my brain works, guys. Sorry, that's just how it is. I've been trading for a long time and this works for me, right? So let's look at the daily, right? When trading gold, for me, the daily and the 4 hour, that is your bread and butter. I've said that a million times. That is your bread and butter. Now, when you see fuckery like this on gold, it's usually times where you kind of want to stay away, right? You really want to stay away. You want to see this on gold. You don't want to see this shit. You want to see this right here. Okay, now this isn't the cleanest structure, right? For me, it is, right? But for a newbie or somebody that's just starting out, it may not be the best type of structure to look at, but you want to see beautiful trending markets. That's the best time to make the money in the market, is when the market is trending. You will not make money in this market if you're not looking for trends. If you're trying to catch simple little baby moves, well, good luck with that. The best way to make money, especially with gold, is to look for it when it's trending. When it's trending, it's your best friend, because gold is going to just go. It's going to go. When it's doing this shit, this is just manipulation. This is a big ass order block, you know, whatever words you guys like to call it, whatever. But this shit is just, okay, the banks are looking at you guys like, okay, let's take some money. Let's take some money before we do something like this or something like this on them. And Dimitri, you can correct me if I'm wrong. You can jump in anytime if you feel like, you know, there's something you may not agree with or whatever it is.
No.
Right. But in my mind, like, I don't know how you feel when you see stuff like this, Dimitri, but when I see shit like this, to me, all I see is pure manipulation. I see the markets just looking to collect orders, to collect money, to stop out as much people as they can inside this shit before it makes a big ass breakout. So that's that. I mean, that's in me. That's in me in my eyes. And mind you, this is on the daily time frame. This is on the daily, right? If you guys look closely here, you'll see on the daily time frame, price was holding this level here, right? It broke below and it was holding. Reject, reject, reject. Finally broke down. Broke down, didn't break the last low, right? We have a low right here that's being held, right? Tried to break, rejected, pushed up. Now we have this level right here. This bullish engulfing that engulfed and broke all these highs. For I don't know how many candles this is, but for several days, this level, if I extend this over, hasn't been able to break. Finally, it engulfed, it finally broke, and it closed above all these highs here. Didn't break these highs, but it broke these highs here, right? So we're looking for price to make a new high to continue up. Now, if I'm looking at the markets right now, and if let's say I had to take a trade, right? Somebody put a gun in my head and say, Charlene, take a fucking trade now, I'm gonna blow your head off, right? I'd be jumping in. Why? Because price pushed up, rejected, it left the wick at the same rejection level that it left below. But even when price makes a high, what am I looking for? Pullback. I'm looking for price to come back to a certain level that it broke to make sure that that level is now valid, holding for price to come up, come down, retest, and then take off. That's all I'm looking for. So we look at here. So let's clean this up a little bit. If I look here and I say, okay, price pushed up, we rejected this high, right? We rejected the same level we rejected before. We came down, we made a new low, right? Price closed right on top of the last level of resistance that was holding. Then we have another little engulfing that engulfed, bullish engulfed all these candles here. So I'm looking for another little push to the upside, hopefully that we can break this high and then continue up. And then if I look left, I'll see that price was nice and clean to the left here, okay? Also, what do I have to keep in mind? Let's go up to, let's say this was the lower time frame, and let's look closely, right? We will see that price has come down. So what's sitting up here? What's a whole bunch of stuff that's sitting up? Money. This is liquidity. This is all money. Everyone that was taking sells down here, the market knows that, and it needs to collect some of these orders that's sitting up here. So it makes sense that price is rejected 1, 2, 3, 4, however many times down here. We have a little bit of a mini uptrend going on here, right? Price is making new lows, continuing up, or new higher highs and higher lows, pushing up. Okay, so everything is signaling buys right now. Everything is signaling buys. There's nothing here that's signaling a sell. Okay, so, and this is on the higher time frame. This is on the fucking weekly where I'm sitting on right now, going down to the daily. Going down to the daily, right? We have this level that's been holding. Why would I look for sells? That's just me. Why would I look for sells? Holding, high could not break, pushed up, retest, engulfing. I'm taking it up. And this is price action. This isn't even really technical analysis. I mean, it is to a certain extent, but for the most part, this is, you could look at it as purely price action, right? If I was looking at this on the 30-minute or the 15-minute, yo, best believe I would have been in buys from fucking down here. I would have been buys from down here, right? If we want to get real technical with it, bust out fibs, didn't quite come down to our 61%, but it rejected our 38% at our last level of resistance. And we have this engulfing here. And we have this engulfing. So, I mean, gold is just simple to me at this point in time. I don't really complicate it much. It's not a difficult pair to trade when you know what you're doing, but at the very least, it does respect structure. I remember somebody asked that in the chat. Somebody did ask what pairs respect structure well. Gold does respect structure very well. Can you repeat that? You sounded choppy. My bad, guys. If you can't hear me or whatever, just drop it in the chat, guys. And do you trade trend lines at all? No, I do use them in my analysis, but I don't trade them. I don't even know if there is a way to trade trend lines. I don't know. Trend line is just an indicator that's meant to help you identify a structure. So I don't, yeah. What about the long red wick on the bottom left? Should we worry about a liquidity grab? Long red wick to the left. Are you talking about this one up here?
Look at the flick of the wick.
Are you talking about this one right here?
You talking to me?
Nah, Nate asked in the chat box, what about the long, should we worry about a liquidity grab?
I
Um,
think people
but
with the nadir sus.
probably, yeah. But don't, guys, don't take, like me and Dimitri talk about, grabbing liquidity and things like that. Don't just go off that alone. You got to put all of your confirmations together. You can't just take one confirmation and ride off. You can't just trade supply and demand and say, oh, you know what, this trade hit my supply zone, time to buy or time to sell. Like, you have to put all of your confluences together and try to come up with a trade idea with all those things put together. I'm not just going to look up here and say, oh, there's a bunch of liquidity, I'm just going to take buys. No, I need to see all of my I need the rest of the chart to tell me what goal is trying to do before I decide if I'm looking for buys or sells. Now, once again, I said earlier that I'd be looking for buys, but I got to ask myself, Charlene, what's the probability that I take buys and I win the trade, or the price goes against me? Because just because I'm looking for buys, I see a pullback, and I'm looking for buys, I see it engulfing, doesn't mean price is just going to shoot up. What if it goes against me? What then? That's why I said I would take buys at support down here. I'm already being buys from down here or in this area down here, because that's what my confluences are telling me. But if price goes against me, guess what? My risk is very low. My risk is low and my support is very high, right? So like I said, I'm looking for buys. I'd be entering buys somewhere down here. If the trade does go against me, then my risk is low and my reward is high. If it goes against me and my buys are invalid, guess what? I'm still here. I'm still here. And even if I want to extend my stop loss, I could, if I really want to be risky with it, could extend my stop down here, right? So if price does want to fuck around and come play around down here some more, as long as it doesn't break this last level of support that it's been holding, then I'm still valid. I'm still valid for price to possibly come up, play around, come down, do a little dance down here, and then shoot up.
A little dance. You mind if I share my analysis real quick?
Yeah, let's do it. Let's do it. Let me stop share, and you're good to go right now. Take notes, folks. Take notes.
So I go on kitco.com. I don't know if you guys ever heard of Kitco, but it's a really good site for these are like just the news sites and stuff like that I use for gold and shit. But finviz.com. Yeah, so these are the sites that I use like for gold primarily. And I like to look at this. This is like the map. So the map shows you all the stocks, right? The stocks that are doing well. And sometimes I use it as an inverse because we obviously know like when stocks are up, sometimes we'll see gold go down. And sometimes you might see them moving in the same direction. Sometimes you'll see gold go up. Doesn't necessarily mean that it's 100% correlating all the time, but I look for the main stocks, obviously, the main stocks. And so I'll look at this chart usually when it's, all green versus all red, then I'll, base my decision off of that sometimes too. And I also look at like, just what's going on in futures. You could see like the relative day performance, things like that. It's just a cool site to like look at to see what's up. Like you could look at it for all over. You could look at it for gold. You could look at the contracts of 100 troy ounces, which I'll get into in a bit. You can see the performance on gold. Let me see, where is gold at? I don't know why it's not showing soybean metals.
It's a little bit at the top there.
Oh, you see it?
Yeah, just move your mouse a little bit up. It's right under crude oil Brent at 0.14. A little bit down, right there.
Yeah, so you can see the relative day performance of gold, like how it's been doing. And then it shows you the commercial hedgers, the large traders, small traders within this line, which is pretty cool. I love to use this site too, because this site is just primarily all based off of gold. And they just literally talk about gold. They update shit on gold like every 2 minutes. So you see the outlook, gold surges past 1800 on dollar weakness and Omicron fears, which it's kind of sensible too that, you know, price is going to go up for gold just because of the Omicron fear. So when investors are scared, right? When US dollar is essentially going to go down because of the Omicron fears, right? So when investors are scared, they take their money out of US dollar and they put their money into gold, right? So sometimes they take their money out of USDJPY, they take their money out of the 30-year note, they take their money out of all these things and they put their money into like Bitcoin, they put their money into gold, they put their money into metals, they put their money into things like that when they're scared of economics collapse, because those things are more precious metals. Those things are what we use for hedges for inflation. You know, when we see interest rates go up, those are the things that's where we move money. So I'm also thinking about not just the technical side, but also fundamentally, where is the money being moved? Because now that I'm thinking fundamentally, it makes me able to operate on the technical side a lot more easier, because I understand where the money is already being moved because of, you know, Omicron and everything that's going on. But sometimes also news is fluff, news is BS. But usually when it's something like that's something that you see that is a global crisis, usually sometimes that'll pan out. So my analysis real quick is on gold. I'm going to start off here. Okay. Let me just break this down real quick. Okay, so let me go here. So this is like POC and other stuff that I use, but so I like to start off in zones, right? So this is the highest zone. This was the second highest zone. This was the third highest zone, right? And so when I look at the market in a zone perspective, it's almost like somebody coming up for water and gasping for air, right? And they can't gasp for the air because someone is pushing their head down. So sellers are getting pushed down every time they come to this level. They're at 273. Then they get pushed down to 1959. You know, then they try to come up to 1909 and they get pushed down again to 1876. And then after getting pushed down to 1876, now they're currently at 1816, right? So putting these KRAs, which are key resistance areas, it allows me to track where the print point, where the prices are due to the exhaustion zone. So this is one exhaustion zone. This is another exhaustion, two exhaustions right here. I wouldn't say this is necessarily an exhaustion, but it is a resistance zone. So I'll leave this here, but I'll just highlight it as gold. This is another exhaustion zone right here, right? So I'm looking at where price is mostly exhausted to see, will price go past these exhaustions or will it stop at these exhaustion levels, right? And so here we see buyers, and we're at 1873, and then they were at 1818. So now it allows me to change my bias a little bit. It makes me think, okay, well, buyers are here at 1820, but in order for price to go up, I would like to say that I would like to see price go past 1834. And I never really do it on the wick. I'd rather do it a little bit above the wick. So maybe 1841, which may be a long buy. That's like, people are like, damn, that's a long ass buy. That's like 230 pips, but you can still get it on the hour, 15 minute. You can still get it on those charts. But I never look at it as like I'm missing out on a trade. I'm looking at it as like I'm setting myself up for a better trade. So even if I miss 230 pips, right? I'm looking at it like, okay, well, what if price, again, I always think like, yeah, price could go up and it could shoot past this, but what if it goes here and it just stops? Or what if it stops here, right? Or what if it stops even halfway? For me, I'd rather, depending on the setup that I'm taking, I'd rather have it long-term to where it's breaking out of 1837, and then I could get it maybe right here at the bar for 388 pips, right? From here to here, from this point to this point. I don't usually like to trade in a danger zone. These are like landmines to me. I don't usually like to trade in these type of zones, but I do it anyway sometimes if the setup I see is worth it. Now, okay. So also, when I look at candlesticks, right? Candlesticks, I look, are like a unique story. It's like sitting around a campfire and we're telling a story, right? If Johnny's talking, Sarah's talking, and Tiffany's talking to each other, and I'm telling the story, they're never gonna know what happened in the story because they're not listening. So oftentimes people will try to get ahead of themselves and try to figure out what the market is doing, but they're not actually reading the story of what the market is telling you. So these candlesticks have different body sizes, right? And these body sizes are like people. Some are skinny, some are large, some are small, right? Some are tall, right? But depending on your body size doesn't necessarily tell you about the person you are, right? Doesn't mean you're a good person or bad person. It only tells you about your habits, right? So if you're somebody that's like super brolic, that goes to the gym, then you could see, oh, this person's self-disciplined. If you're somebody that's super skinny, you'd say, okay, maybe this person doesn't go to the gym as much. If you're somebody that's like crazy overweight, right? You're like super obese, right? Then you could say, okay, this person's obviously not working out as much. You can't assume that person's a good person or bad person, but you can make an assumption about their habits. And so the same way people have habits, or the same way these candlesticks have habits of the way they form, right? And you could pick up on those habits and know when the habits happen by being able to recognize certain moves in the market. So a little freebie I'll give you, okay, is boom, 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 boom. Well, you guys want me to give my analysis, right?
Yeah.
Okay, well, I'll give the analysis too. I was about to just give like a little strategic strategy that they could go about, but I'll give my analysis. So for me personally, right now,
Well, give the strategy too. Yeah, whatever little nuggets we can give them.
Yeah, right now I'm kind of just like looking at 1836 at this level, seeing how price reacts. You know what I mean? At this point, I don't want to take a trade yet until I see how price is willing to react at this level, because price is at 1814, 1815. Before it came here in the past at 1814, it came here at 1815. So it's hit this level a consecutive number of times. Also, price went through this level. So I don't just look at support and resistance. I look at the fact that price went through the level, right? So what happened? Remember, we're telling a story at a campfire. So what happened? Activity happened at this level. We saw a large candlestick go to this level, which was a large amount of volume. We've seen, I wouldn't really count this as super large, but we've seen this candlestick go through this level, which is a large amount of volume within this area. This is another thing, a large amount of volume within this area. Another large amount of volume, right? Here it really wasn't a lot of volume, but the volume was picked up slowly. We see another candlestick. Where is it at? I like to look for the large, large moves, right? So at this level, I could say that large moves have happened, right? So I can anticipate a large move to happen, whether it's up or whether it's down, right? Because price has gone up through this level and price has gone down to this level. It doesn't matter whether it's buyers or sellers. What matters is a certain amount of volume was moved at this particular level at 1815.581, right? So now it gives me more of an idea of, okay, how can I set this up? Because I know a lot of volume is about to move through it. So I never take a trade right on the wick. I always take it maybe a little bit above, just because, you know, anything could happen. Sometimes you say, okay, I'm going to buy, and then you get ready to hit, and then it goes right back down. You know what I mean? Just like it came here. So many people could say, well, I'm going to buy when it breaks this level. And it's like, all right, never happened. Then you're like, all right, I'm going to buy when it breaks this level, and then never happened. So I want to personally wait until I get a little bit more confirmation. Right here, let me see. So right here we have 153 pips, which I think is definitely worth it. 153 pips. And let me size this down. Do
you intraday or you swing trade gold?
I usually swing trade. I mean, I intraday swing trade. Sometimes I do a little bit of both. Sometimes I hold the trade for an hour. Sometimes I hold it for a week. It all depends on the setup that I personally see. Where was I? Sorry, somebody was texting me about some nonsense. Okay, so yeah, so boom. So I'm gonna go down and look at a different window, right? Look at a different window of time frame so I could figure out where my stop loss would be, figure out where my entry would be. Sometimes I don't fixate myself on just one time frame. I like to look at a bunch of different time frames. The reason why I like to do this is because it's like, let's say you lived in a place and you only had one single window, right? Like your window was literally this small, and you could only see the water outside of this little window. You might be like, dag, well, at least I could see the water. Or you could have a 180 view and you could like, oh man, I could see the Empire State. I could see this, I could see that. you're broadening your perspective to see more of the view. So lots of times, sometimes we get fixated on one time frame because that's what we're fixated on, that we don't see when we go down to other time frames. It gives us a different perspective. So sometimes I like to start and see, okay, well, this is the daily, but where will I enter it? Maybe I'll enter it at the 4 hour. So maybe something like the 4 hour, I'll look and I'll say, okay, well, I'm going to enter here at the top of here where this support zone is, and I'm going to take profit at this level, right? So my buy stop is going to be here. My take profit is going to be here at 144 pips. And my stop loss, let me see. My stop loss will probably be, I could vibe with a 44 pip stop loss. So if price comes up to here and price breaks past here, I'd rather put my stop loss around this area, 44 pips. Because I'm cool with risking 44 pips to make 150 pips. That's fine. That's fine with me. I'm almost at 200 pips, right? It's like somebody saying like, well, would you risk $4,000 to possibly make $15,000? Yeah. If I knew I could make 15, 20.
Oh yeah.
I'd risk 4. You know what I'm saying? I'd risk. So, you know, that's me personally, what I would do. And so that would be my entry, and that would personally be the approaches. Teaching styles are so different too. Yeah. Everyone's different. Doesn't matter what the teaching style is, right? Like everyone's gonna have a different teaching style. It's like, can you follow the teaching style? You know what I'm saying? Do you have the emotional discipline to follow everything through? So that's one thing I use. Sorry if it seems like I'm kind of rushing through something, just because I'm going to be on the go in like 10 minutes. But I wanted to pull something up that I also use. Give me 1 second. So,
What session do you normally trade gold?
I love New York session, honestly.
Nice.
I stopped trading London session for a bit.
Yeah, same here. I trade mostly New York. I don't trade London at all anymore. But it does move during London, though. It does move nicely.
Yeah, it does move nicely during London. Okay, where was I? All right. Okay, great. What's going on? Am I getting this right? Come on, bro. They can't be serious right now.
What happened?
G, CG, GH, or GF?
Are you, I'm not sure what you're asking.
No, I'm just, give me a second. I'm just trying to find this contract for gold. What is gold's future contract? I'm just trying to see what gold's contract is for today. Because the contracts change in the rollover. So I'm just trying to see what is it. GCG. Oh, is it GCG?
For those that don't know what gold contracts are, could you just quickly explain what that is? There's probably some people that don't know what that is.
Oh, okay. Okay, it's GCG 21 or 22? 21? No, 22, right? Okay. Yeah. So gold contracts, basically, these are on futures. So people can predict, you know, the future outcome of something happening in the market. And if their trade expires at that level, right, or above that level or below that level, whatever they decide to do, they get paid out from that. So when I say contracts, I'm basically talking about future contracts, and they think they have this thing called rollover. So rollover is like every 3 months they refresh the contracts. And so the numbers will sometimes change at like GCG, GC2, GC1. And so that's why it was kind of hard for me to find. But I got it now. Okay, so I'm gonna just share real quick I usually just share this to my advanced students, but I'm not going to get too much in depth. But essentially, I use this order flow platform. It is hard to understand, I'm not going to lie, but what I do is I look at, I don't know, can you see? Oh, you see my shit, right? Okay, cool. What I do is, oh my God, so much shit on here. Don't get me wrong, I still use technicals all day. I am a technical, I am a technical trader all day, every day. That's primarily where I do everything. But I also like to look at this order book. So COB is like current order book. It just tells me the amount of contracts that are at a certain level, and it highlights the liquidity zones within that level. So it allows me to see like, oh, okay, for the instance, this level has 20 contracts in it, or this level has 5,000 contracts in it. So I could see where the sellers and buyers are within the market, and then I could sell based off of those levels or buy based off of those levels within the contract. Somebody talked about Renko bars. I don't really like them. I prefer to use volume dots or candlesticks because Renko bars don't plot intra-minute, intra-day, intra-second, and they're not really that accurate in my personal opinion, just for using them. But I personally like volume dots, and I also like candlesticks. With these volume dots, I could actually program them to move as many pips as I want to. So if I say, yo, I want to see the market only move every 20 pips, then I could change it to every 20 pips. So if I want to say, I don't have to see it move pip by pip. I could say, make a new candlestick every 20 pips that the market moves, or make a new candlestick every 30 pips that the market moves. So if I want to get a different perspective on where the market's moving, or if I'm getting faked out, I could see that. I could see where contracts, like, you know, me being spoofed. So I can see up here, like this light zone lets me know that there's a lot of fake contracts up here for a buy. I could see little things like that. And this is just, I don't want to give too much detail, but this is just a general platform that I use to see where orders are at in the market, right? But I use this more in depth of like to really kill shit, my technicals. This is just to kind of like let me spot where everything is at. You know what I mean? And things like that. Give me 1 second. Give me 1 second. Give me 1 second. Don't kill me. Don't kill me now.
No, you're good. We're about to wrap up pretty soon anyway, so I think
we're gonna wrap up pretty soon.
Give a lot of gems in this Zoom here.
I'm gonna go over some technicals real quick.
Yeah.
Lower east side. Hey, my friends. I'm gonna start.
How would you handle risk management when growing? Stick to a certain lot size until you're confident, of course, until you find consistency with that lot size. You only up your lot size, guys, when you're consistently profitable, in my opinion. I mean, you can up your lot whenever you want, but you really only want to up your lot size when you're consistently profitable. That's the only way you're going to gain confidence to up your lot size. If you're taking losses and you try to raise your lot size, that doesn't make any sense.
All right, so boom. So I'm not entering this until I'm up here to 1816, right? At this level, I'll have a pending order up here. I love to do pending orders. I don't really like to do too much of market execution. I'll do buy limits, sell limits, all types of shit like that. So boom, I'm entering here at 1816. My take profit is at 1831 just because this pullback was here before market goes up. Now, once the market goes up to this level and I'm up 163 pips, I'm going to wait to see how price reacts at this level because there is a small little pullback here, but there also is a massive amount of volume that went through here. So now I have a new target. Okay, now my target is going to be near this level. Okay, and I may enter somewhere around here, depending upon how this plays out. So if this reacts to this level here and I get a little pullback, I'll more than likely think that the market may be going up, obviously due to Omicron and just the technicals that I stated. But in the event that it does, I'm trading it to the next zone after at 127. And the reason why I'm trading it here and not going up here is because there's a huge ass wick here. I never take trades all the way up to the top of the wick or the bottom of the wick. I always like to take my trades 50% or at the close, because a lot of people like are so ballsy. They're like, oh, it's going to go all the way up top here. What you have to understand is like, the further you expect the trade to go, the less probable it actually is. The closer it is, the more probable it is, right? It's like statistics. It's like if I'm in front of a river right now and I have a rock, the chances of me throwing that rock into the river and not missing is 99%, right? You always want to factor in 1% statistics of being struck by lightning or your arm fails or whatever bullshit it is, right? There's going to be a 99% chance that I throw it in. Now, the further I get from the river, now if I'm moving further away from the river, right? So if I am here, if this is the river and I'm here, it's going to be easier, right? The percentages are going to be higher. But if I'm here now, if I'm all the way in the back, then what was once 99% might be like 60% or 40% or 50%. So a lot of people get so ballsy to just want to take the trade all the way up, and they don't realize that like gold is one of the main things that gold does is respects support and resistance. That's one of the main features of gold, right? So when you're learning a pair, you want to find out like about that pair. Does it respect support and resistance? You know, is it more volume? Is it more wick market? Gold. So with gold, it respects support and resistance, and it's a stop hunt market. As you can clearly see, that's what's happening here. Okay, so I never take trades all the way up to this level. I like to take trades 50% of the wick or on the close, because price could just turn around right here, or it could turn around right here at 50% of the wick. But I'm more of a cautious trader, so I'd rather take 50% of the wick or at the close before I go ahead and enter the trade again.
And also, not to cut you off, but ask yourself, why did price reject so hard in that area? It's obviously there's something up there that caused price to reject once before. Or if price comes back up there, there's a high probability it may reject again. So why hold your trade all the way up to the top of the wick when it may not ever get there?
Facts.
You know,
facts. And so here we see
people are saying they can't see a chart. Are there people that can't see it?
Oh, I'm sorry.
I see it just fine. So
okay, so you guys probably couldn't see my chart before. I was talking about this wick. Guys.
Okay.
Where was I? I was talking about this wick right here. Like this wick, I wouldn't take it all the way to the top. I'd take 50% of the wick. And then my entry point from here to here, I'd enter from here to here at this level. Okay. Tirvana, let me just see real quick. Yeah, I'd enter at this level, take profit at 1831.26 because there's a rejection zone. Wait, but there's also that volume that's breaking through the level, right? So I'm going to also see what's up with that. But I'm going to take profit at 1851. People are like, yeah, but can't you take profit here? This is the real main resistance. No, because the further the trade is, the less probable it is. Like I said, rock into a river. I know you guys couldn't probably see my screen before because I was talking about XYZ, but I was basically saying that this is the river. This is you with the rock. The closer you are to the river, the higher probability you have. The further you are from the river, the less probability you have. So a lot of people want to take these ballsy trades and these swing trades, which there's nothing wrong with swing trading because I'm a swing trader myself, but I swing trade very calculated. Like I don't just I don't just take a buy here and say, oh, well, I'm taking a buy and I'm holding it until it goes up to kingdom come. No, I say I take a buy and I'm taking it to the next zone, to the next zone, to the next zone, to the next zone. It's the same shit, honestly. Like, yeah, I may miss out on 5, 6, 20 pips. It's not a big deal for me. At least I could say I locked in my trade. People are like, oh, but you could put stop loss and profit. Yeah, you can put stop loss and profit, but you also make a lot more by scaling into the trade as well. Because your stop loss and profit could go up and then boom, you could easily hit. So that's what I like to do. I like to see where the direction is going, and then I add positions within the direction. So I'm still swing trading in that sense, but I'm just more creeping my way up there. I'm more taking the stairs than taking the escalator. I'll put it to you like that. But as for the monthly, right now with my analysis, how I would start it off is I would see, okay, this was the lowest point within this specific zone. This is the lowest point. This was the highest point within this specific zone. So these are the highs and this is the low. Okay. Then we have right here, which is these are like the middle ground. Boom, 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 boom. I like to plot these zones. And I keep it very simple. I don't have anything super complicated or anything crazy. This is actually mine. Somebody designed this for me. It's actually on the indicators. I know Anthony's World uses it, which I didn't even know he was using it until I saw in his video. But this is it. It's a gold mines 9,673 users, and it works pretty good. I'll teach you about the TDI in a second. So this is the main support zone right here, right? This is the main support zone that we have right here. Prior to that, we have this zone also right here at 1725. Prior to that, we have this zone right here at 1745, right? And then prior to that, we have 1866. Now, from where you're at now, we can clearly see price went from 1764, and even this little pip, right? Even like a little pip up, I still count it. Doesn't matter. So if price was right here, even if price was right here at this little nitty gritty part, and it went up one more pip, it went up to this level, I still count it because it's skipping from one point to another point. And sometimes those little small holes that we miss, we think don't matter, but they actually do. So we could see that price ventured up from here to this level, right? So it's edging higher. You could clearly see that with the trend line, right? It's edging higher. You could see it here and you could see it here. You could see it's edging higher. Now, where will it edge to? That's the question. So I think personally, it may edge to 383 pips. However, you want to take into consideration that look what's on the left-hand side. Look what's on this left-hand side right here. We have some rejection here. So don't be so gung-ho and happy, right? But just have your perspective of, okay, you know what? I think the market's going to go up if it breaks out 242 pips. But how do we get there? How do we get to that too? We're not going to swing on the weekly. We're going to take the breakout of 1813.01 at the breakout of here. We're not necessarily on it, a little bit here. Okay. And then we're going to take it to this level first. So here's how we collect the first 100 pips, 139 points. Okay. And then we scale up from there.
So we'd both be looking for buys.
Both be looking for buys.
Two completely different perspectives on looking at the market, but the end result is ultimately the same. Ultimately the same. Pretty crazy how it's how trading is all about how you see the market. Me and you could be sitting side by side and see two completely different things looking at the same chart.
Facts. That's a fact. It's all about perspective, you know, like some people are looking out of Professor X's eye. Some people are looking at a Johnny Blaze's eye. Some people are looking at a Cyclops. Some people are looking at a Superman. Everyone has a different perspective, just like prescriptions and glasses, you know. I mean, I don't know glasses that well, but I know there's different prescriptions for them. And some people have great eyesight. Some people have bad eyesight. Some people have, you know, contact lenses. There's all a different way for them to see. But it doesn't necessarily mean that they're wrong, that one person's wrong about the other. So that is great. Sorry I couldn't get more in detail just because I'm rushing to go out to eat right now.
No, this was awesome. This was great. We went on for a good hour and a half here. I think we gave a lot of good info. I mean, I don't have any last thoughts. I would just like to thank everyone for jumping on. I mean, thank you as well, Dimitri, for inviting me to do this. It was excellent information. I mean, I think a lot of people got a lot of information out of here, and just good luck, guys. Good luck with gold. I mean, 2022 is going to be a big year. It should be a big year for a lot of us, especially those of us that trade, gold, US 30 and stuff like that. A lot of volatility in the market, a lot of movement, a lot of money to be made. That's pretty much all I can say there.
This is me on Instagram. Right now I'm revamping my page kind of. So
I was about to say, what happened to your profile picture?
Yeah, I'm revamping my page just because there's been like a lot of fake accounts of me and stuff like that.
Oh, okay.
So, yeah, but this is me here, and I don't have any posts right now. But you can click here and stuff like that, and you'll see. I'll put my my link in here too, so you guys can ask me. You could all just feel free to message me. Just message me. Just keep it simple. Just message me. I really don't have time to like be posting all this shit, but yeah, you can go ahead and just message me or whatever if you like the webinar. And I'll tag Charlene too in the post too. So if you did like this webinar, make sure you tag me and you tag Charlene. By the way, this is my only account, the Goldfather _, no extra R's, no extra E's, just the Goldfather _. But make sure you tag me and Charlene as well. Also, those who are in my Telegram, make sure that you give a big shout out to Charlene. Follow her on her gram, follow her on her Telegram. She is truly the gold mama. I loved her breakdown on Fibonacci, and I loved her breakdown on her technical analysis, TA Queen. So I appreciate you, Charlene. Thanks for definitely setting this up. It means a lot to me, and you're the best.
Right back at you, man. Hey, listen, enjoy your evening, enjoy your night. If I don't talk to you before then, have a very, very good Christmas and New Year's. And until the next one, guys, you guys have a good night, and catch you guys on the next one. Peace and love.
Catch you guys later.
Later, guys.